Welcome to this video on the BETTED Toolbox. In this presentation, we will focus on the LCC Toolbox. After a brief introduction to the project, the video will highlight the tool's key features and provide an example of its practical use. BETTED stands for Boosting Energy Transition of the Dairy Value Chain. It is an European project that focuses on facilitate companies belonging to supply chains in the dairy sector to foster the market uptake of energy efficiency measures, including the use of renewables and the deployment of heat pumps at the value chain level. Moreover, the project will also significantly contribute to the reduction of fossil fuels dependency, fast-forwarding energy transition. For further information on the project, please visit our project homepage at www.bettedproject.eu. The mission of BETTED is based on three pillars. 1. Establish a capacity-building program and community to transform organizational energy cultures, enhancing skills and knowledge in sustainable value chains, thus promoting energy transition for companies. 2. Implement tailored and easy-to-use tools engaging companies operating in the same value chain. 3. Provide policy and regulatory recommendations aiming at speeding up the energy transition. Let's move to LCC. Life cycle costing refers and traces all relevant costs associated with a project for its entire life cycle. Environmental life cycle costing summarizes all costs associated with the life cycle of a product that are directly covered by one or more of the actors in that life cycle. For example, supplier, producer, user, or consumer, and so on. LCC helps decision makers evaluate not just the upfront cost, but the long-term economic impact, making it a key tool in project planning, sustainability, and investment analysis. The BETTED LCC tool provides an holistic approach for energy efficiency measures in cold chains from an economic perspective towards a systematic evaluation of the lifecycle costs. This is made by the provision of economic performance indicators: unit costs, net present value, internal rate of return, and profit index. Energy efficiency measures often entail additional investments, yet they also reduce energy and other costs in the long run. This tool allows you to carry out a simple analysis of the costs and benefits of energy efficiency measures as compared to the current situation. The analysis allows you to realize a conventional economic analysis from a company's perspective. In addition, the tool offers the possibility to analyze the impact of the energy efficiency measures from a societal perspective, pointing out the costs and benefits of these measures. Societal life cycle includes a larger set of costs. This approach includes those costs that will be, or could be, relevant in the long term for all stakeholders. It refers to either direct costs or those indirectly affected through externalities, such as direct and indirect costs covered by society. Let's take a closer look at the tool. The LCC tool is characterized with a blue color. The tool, developed in Excel, contains several spreadsheets. The first page in the tool is the info sheet. The info sheet provides you with basic information about the tool. Probably the most important feature on the info sheet is the language selection. By clicking on the drop-down button, a list with the different available languages will open. Simply select your language and the entire document will change accordingly. We will go on the English version now. A second important item in the LCC tool is color coding. You will find cells with different backgrounds. Color fields, in this case, a blue color, are the only cells that you should modify as user. Gray field items contain values that are transferred from the different section on the workbook that has been calculated from your input. Let's proceed a bit further into the LCC tool. Next to the info sheet, there is one input sheet. The input sheet is the place where you may insert your data. In this tool, these are numbers that are part of text specifically referring to the product under consideration or the energy efficiency measures to be compared with respect to a baseline scenario. Let's have a closer look. In the input sheet, you can find the input sheet fields for up to 3 energy efficiency measures. The life cycle costs for these measures will be calculated from a conventional perspective and a societal perspective. The required input spans 4 sections, namely a definition of the energy efficiency measures, the cost associated with them, their impact, and the framework conditions for the analysis. Sometimes it is necessary to fill in data for the current situation. without any measure in the situation with applied energy efficiency measures. Please fill in all items to your best knowledge. In some cases, you will find default values that you may overwrite with your individual information. In the description part, you may specify a product and a brief description for each of the energy efficiency measures under consideration. Please note that the abbreviation is used as caption and description is for documentation only. Later, supposing you would like to evaluate the LCC of 3 energy efficiency measures compared to baseline scenario. You can enter in the dedicated cell a small description, such as introduction of PV panels in the warehouse, change of the transportation vehicles, change of the insulation material or technical unit, for example, compressors. In the next section, you can find the costs of the energy efficiency measures which you reported previously. These encompass those related to one-time planning and investments on the one hand, and the annually reoccurring running costs on the other hand. The project definition costs include internal upfront efforts during the project definition phase, such as for design, internal coordination, etc. Technical assistance costs are costs contracted to third parties for planning the energy efficiency measures, for example, energy planners. You may now enter these costs within the dedicated cells for the 3 energy efficiency measures to be compared with a reference baseline scenario. The next part is the core of the LCC tool. Here you may report the investments for the energy efficiency measures which you already calculated beforehand. Investments include any one-off expenditures or implementing the energy efficiency measures, such as the purchase and installation of equipments and construction works. The following fields cover changes in costs for operation, including maintenance and for production, for the situation without any measure, and for the 3 measures under investigation. Please note that changes in operation and maintenance for the measures are defined later and do not need to be entered here. The section number 2 is dedicated to the changes of the planned energy efficiency measures in specific areas, which directly affect the demand for resources as well as production and products. Changes due to the energy efficiency measures refer to this situation as compared to the baseline situation. For all changes, with the exception of the carbon dioxide emissions, the values are to be provided as percentage. Reductions in demand are represented with negative values. The refrigerant recharge refers to the amount of refrigerants that needs to be refilled. In this section of the impact on production are reported the total cost per unit. These include any fixed plus variable costs per unit, including packaging materials, storing, and transport activities. The quality factor is linked to the waste of the food products under review at the end of the cold chain. The quality factor of 100% means that the total harvested or processed products were successfully delivered to the consumer without losses throughout the supply chain. On the other hand, quality factor of 95% means that percentage of the product was lost. The section number 3 is dedicated to the capital costs applied to those situations where energy efficiency measures occur. In the inherent or specific economic parameters necessary to evaluate the profitability of the energy efficiency investments, namely share of investment covered by equity, remaining share of investment covered by external funds, required rate of return from equity, interest rate for external loan. The last part is dedicated to the social LCC. In the analysis of societal costs, lower discount rates than for investment decisions in companies are usually used. Therefore, a separate discount rate needs to be specified. The next sheet is visualization of the calculation adopted within the assessment. This shows the results of the energy efficiency scenarios respect the baseline scenario in terms of net cash flow, discounted cash flow, return on investment, net present value, internal rate of return, profit index. Finally, in the results sheet, you may see the final results of your life cycle evaluation. Here, the life cycle costs refer and trace all relevant costs associated with a product for its entire life cycle. As mentioned, the life cycle costs are provided for a situation without measure and compared with a situation with applied energy efficiency measures. The results are based on 3 main economic performance indicators. First, the unit cost. The unit costs indicate the operating costs to produce a specific unit of the investigated product. The lower these costs, the more favorable is the situation. Please note that these costs do not include investments in the case of energy efficiency measures. Second, the net present value. The net present value is the discounted value of the income minus expenditures. The higher its value, the more favorable is the situation. The calculation considers only those cash flows that are within the scope specified earlier. Third, the internal rate of return. The internal rate of return is evaluating the profitability of an investment required for a certain energy efficiency measure. It is calculated for the organization that implements this specific energy efficiency measure. It shows the maximum interest rate of a loan that can be tolerated by the project and if it exceeds the capital costs. The higher the value, the more preferable is the situation. Any internal rate of return higher than the average cost of capital can be considered as valid. Fourth, the profit index. The profit index is a ratio between the present value of future income as compared to the initial investment. Any value higher than 1.0 can be considered as valid. This was our presentation of the LCC tool within the BETTED project. If you're curious and want to explore further, additional tool videos are available on our channel. Thank you for watching.